Hello everyone, this is Jimmy Singh, broker owner with Supermax Realty. Welcome to my channel, Real Estate Edge with Jimmy Singh. What a beautiful summer day, guys. I just came to my office after showing some properties to my clients, and I just want to shoot a quick video replying to some of the inquiries through my channel. First inquiry, they are saying, how do we profit from this real estate market? That is very common question I get asked by my clients or investors. Second, what is the outlook I see in our greater Toronto market or Golden Horseshoe, Southwestern market? How do I see summer months going forward? First thing is, I recommend all my clients that what we have to do is we have to now see 12 to 14 months down the line. So you have to see, different trends. You have to see population migration patterns. You have to follow, where people are moving, job growth. You have to also see what cities which were, dormant for like last couple of years. Now suddenly there's big demand because of the affordability. If you see in Canada, guys, the bigger cities right now, Toronto, Vancouver, they are building surplus of inventory, especially in the condo market, which is struggling. At the same token, there are some markets in Canada, especially Alberta or Manitoba or Nova Scotia. There are certain markets which are kind of very, very slow or kind of flat for years. And suddenly now, they got a boost and people are now looking for affordable option, leaving bigger cities to the smaller towns. Even in Ontario, where our team services, I have seen some mid-tier cities, they are doing very, very well, and the sales suddenly have picked up since the last rate cut, which was happened in June the 5th. 4 years it took for Bank of Canada for the first rate cut. So I'm noticing myself because I'm in field every day showing, selling properties, especially starter homes. People are looking for single family homes instead of smaller condos. That market is doing very well. And condo market inventory is piling up. Not sure what the current today's supply is in GTA. But in Toronto, the supply in May was close to 8,500, which was, 10-year high. The supply is building up, rental market of condos are slow. So those are two different segments I'm noticing. But as I said, study the demography, study the migration pattern of where people are relocating, and see the trends for next 12 to 24 months. So we are started with first rate cut in June. Next meeting would be July. I'm not 100% convinced that Bank of Canada will cut the rates, but certainly economists believe September or by the end of year, we might see certain cuts. And another thing is, in 1 year's time, I think there will be more cuts down coming. Talking about builders, we work with a lot of new construction. So what I'm noticed is, in pandemic, the interest rates were historically low and we have lot of housing starts, meaning they were issuing permits, builders are putting lot of supply in the market, and then it was absorbed by a lot of speculators, investors, and first-time buyers. But now I notice slowness in the market because of the cost of funding a project has gone up, and now builders want to make sure if they launch a project, there is growing demand in the market for that kind of product. So that is a trend you have to see. So construction is slowing down. We might not feel the impact now, but I think in next 3-4 years, 2027, 2028, 2029, we will see this, issues of affordable housing or supply. So if you're an investor, what trend you should watch is, you have to see where supply is building up in certain market where you're focusing. you need to see where rental rates are softening, because there lies the true value. Because if there's a lot of supply, there are some people who will panic, and then you can get a good deal in those kind of markets. But make sure in today's rate, always focus on cash flow. Cash flow is the king in real estate. From the very early on, since I started investing 20 years ago, my mantra always is look at the cash flow. How much is my loan? How much is my carrying cost, taxes, insurance, maintenance? How much I have to put from my pocket, and can I carry this property for next 5 to 10 years? Maybe the interest will stay for 4% down the line, right? So you have to make sure you do those calculations before you jump the gun. And another thing is, you have to see the trends. You have to see the future trends, 24 months, 36 months down the line. Where will be very strong demand from the buyers? Which segments of the market, or which cities, which good locations will have tremendous demand, and maybe right now supply is building, so you can snatch a good deal, provided you crunch your numbers and you intend to keep the property for a long time. Those are the markets you want to focus, where supply will decline in next 2 3 years, because there's not new houses coming on the market, but people still want to live in those kind of cities, which are good schools, growing job opportunities, diverse economy, accessibility to highway, healthcare. So those are basic fundamentals. Another thing you want to focus is, let's say we talk about London area. So we have world-class university, we have Fanshawe College, we have like 80 90,000 students who live there. Student housing, folks, is in big shortage. We talk about Kitchener-Waterloo. It's again a university town. You go to downtown Toronto. So universities are not in the business of providing houses. There's always shortage of housing. So that need is always met with investors who buy condos or townhouses or detached. So if you're investors, you look at crunch the numbers, and you can see, okay, I can pick up this bungalow with this many rooms and the basement finished. This is how much cash flow can come. And in certain cases, that cash flow will help you qualify for the mortgage. Because when banks calculate your mortgage, a GDS ratio, TDS ratio, they take certain portion of the rent, sometimes 80%, and in some cases 100%, to offset your carrying cost. So look for the cash flow, which is very, very critical. So you can position yourself in a situation where you can profit in next 36 months, 24 months, when eventually markets start picking up and the price rises and you get capital gains for future. Now, replying to the second inquiry, they asked, how do I see, what is my outlook for summer months for a greater Toronto market, Golden Horseshoe, Niagara region, Kitchener, Waterloo, London, St. Thomas, Windsor market. See, folks, I was studying stats, pre-rate cut, stats for May, which were put forward by different boards. And most sales activity in a lot of cities are below 10-year average, the sales. And home prices, they're also kind of sideways. And with recent rate cut, a lot of people are expecting market is gonna just start growing up prices wise. I see activity uptick, because agents in my team or my office, they also give me feedback. I see how many deals are coming to my office. So I am privy to all those transactions. So I definitely see buyers on the sidelines. They know the interest is now down, and the rate cut is on the way. It's just the pattern won't be rate cut every meeting. They might take some time, but I think we already saw the highs of the rates. And in my personal opinion, I feel the starter market, especially single family homes, bungalows, detached, townhouses, they will do very well. But prices is a different matter. It might be flat in summer months because there's tremendous, inventory build up in the market. As far as the rate cut, 25 basis point rate cut won't help first time buyers qualify. So it's not helping them get into the housing sooner and making house affordability. In my personal opinion, we need at least 100 basis point. We need like 3, 4, 5 rate cuts for the market to start accelerating again and the transaction volume to pick up and prices to get somewhere. So till then, prices might just drag on sidelines, and we will see activity definitely in the starter segment of the market, mid-tier, because people say, you know what, prices are kind of stable now. Maybe let's upgrade to this. House is already down 15-20% since the peak. Lastly, guys, I just want to say always make decisions based what's going to happen 12 months, 24 months. Have a long term perspective. So if you're a home owner, you love where you live, you see your neighbor selling your house maybe less than the peak, you don't need to panic. If you love your house, you want to live for next 5, 10, 15 years, you will do absolutely fine, because there's good locations always fetch top dollars, and with our current immigration pattern and big demand, eventually things will turn around. And for investor clients, the only advice I can give you, don't panic. Just like good quality stocks, if you believe in the company, you believe in the story, you are getting good yield or return, it's just market cycle. So we have good 10, 15, 20 year cycle. So we are just in correction that is expected. So hold tight. You might have to hang out to property where you are putting money from your pocket, but I'm a big believer things will turn around in next 12 to 24 months, and we will do fine. So if you are in a market to buy, sell, or invest, call me directly at 647-961-2639, or you can call our Supermax Realty team 519-933-2559. Thanks for watching, and if you're a first time subscriber to my channel, if you like the value of the video, give it a thumbs up or leave your comment. Where do you feel is going to happen in our summer market, especially our Greater Toronto market? Do you feel the price is going to go up, down, sideways? Thanks for watching. I'll talk to you soon.